Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since the Dragonfly Doji, the bullish correction has held and continued into the 7th consecutive day, and now just about clearing the 60-day moving average around 65.5. We do need to see a New York close above this level to implicate further bullish suggestion to the 66 to 67 objective. In light of how the market's performing, it would be surprising to see any weakness. And more to the fact, with the ADX supporting the bull trend, we are a little bit overbought, but the MACD is married up to the actual price, and therefore with all three indicators just strengthened and confirmed the objective, as I mentioned, to 66 to 67 cents. With a busy scheduled week ahead, the focus is on the US federal rate decision and the non-farm payrolls. Alongside that, we do get updates out of China's PMI, but little economic data is seen from Australia. Although we have an engulfing candle when it comes to the euro, the market is not expected to break down given the fact that the technicals are stronger and therefore may overthrow this Japanese engulfing candle and see further gains into this week. The mixed price action comes on Friday as the dollar rebounds back to its 5-month highs around 106.10 after the US Bureau of Economic Analysis reported that the Federal Reserve's preferred measure of underlying US monthly inflation rose moderately in March, meeting expectations. However, the personal consumption expenditures PCE, another key inflation metric for the Fed, exceeded forecasts and remained above the 2% target, reaching a 2.7% gain in the year to March. Despite this data, market confidence was not significantly impacted, but there was a slight increase in expectations for a Federal Reserve rate cut in September. The federal rate decision is scheduled to be announced on Wednesday or Thursday Sydney time, and it is widely expected that they will maintain within the range of 5.25% to 5.5%. Federal Reserve Chairman Jerome Powell emphasized the importance of the confidence in achieving the 2% inflation target before considering rate cuts, indicating that the post-announcement statement will likely maintain a no stance of urgency for cuts. So as I mentioned, the technicals are holding somewhat to a slight bullish bias and therefore looks towards 107.40 and eventually to 108 figure 45. Any pullback likely to be shallow and support seen at 106.80 to 85. Following the latest Bank of Japan's rate announcement on Friday, the market witnessed a surge in US dollar demand against the struggling Japanese yen. The Bank of Japan revealed a more dovish stance than anticipated on Friday, leading to the dollar yen experiencing its largest single day gain of the year, reaching multi-decade highs and near the 160 mark that has been reached now this morning, and last traded there back in 1990. Despite leaving rates unchanged at 0 to 0.1%, the Bank of Japan governor surprised market analysis by stating that the yen weakness had not yet had a major impact on inflation. Meanwhile, as I mentioned, traders will await for the economic data to be released this week, along with the Fed's rate decision. Although I have no view on the top side, the market to the downside is where I'm viewing. That is at 155.50.90. A break here would give a significant downturn and therefore see a move back to around 151.5 or 150. The other factor I'd like to point out is that we are extremely overbought and the ADX is overheating. So no doubt high volatility will play much of the game this week, and therefore traders should reevaluate their positions according to their risk management. An engulfing candle comes through for sterling, but nevertheless the bulls are still maintaining and attempting to push higher, which I feel can be achieved further into today and looking towards a region of 125.5 to 126. Any pullback is likely to be temporary due to the fact the technicals are bullish, so therefore support seen at 124.65. Since the break of this trend in spot gold, the market is maintained underneath the level which once served support, now resistance, and is seen roughly around the region of 2,368 to 74. With declining technicals, I do feel there is further bearishness coming into the market, and that could see a move down towards the region eventually of 2,250 to 70. As we are married up with the RSI and the MACD, does favour this move. Any upside attempts, as I mentioned, have failed over the last 4 days and likely to continue. And wrapping up with oil, well, the market failed to attempt to break beyond 84.2040, and now with the bearishness coming into the second day, could see a further down test, either towards 80.5 or 78.5 a barrel. But we do need to see the first break of 80.50.75 to support the downward case, and any advancement, as I mentioned, should be contained by 84.24. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new week.